Here are the crypto top headlines covered in this video. ETH could reach $27,000 this bull cycle, expert predicts. Next, XRP price is down for the month, so why are whales opening bullish leveraged positions? Also, Crypto.com president talks up MiCA, allowing exchanges to expand across Europe. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, ETH could reach $27,000 this bull cycle, expert predicts. The lack of selling pressure from miners will be one of the main catalysts boosting ETH's price to unprecedented highs in the current bull cycle. Ether could reach $27,000 at the top of the current bull cycle, predicts Ethereum community member and investor Ryan Berkmans. My personal prediction is $12,000 to $27,000 per Ethereum within 18 to 30 months, he said in a recent interview with Cointelegraph. As one of the main catalysts for ETH's appreciation, Berkmans points at the lack of selling pressure from miners, which disappeared after Ethereum switched from a proof-of-work to a proof-of-stake consensus mechanism in September 2022 with the merge upgrade. The current bull cycle is the first for Ethereum since its transition to a proof-of-stake system. As pointed out by Berkmans, miners have to regularly sell a large amount of coins to cover operational costs, which puts downward pressure on prices of proof-of-work coins. According to the experts' estimates, at the top of the last cycle, Ethereum was responsible for the majority of all proof-of-work related costs, despite having a lower market cap than Bitcoin. We should expect aggregate proof-of-work sell pressure to be over 80% reduced compared to last cycle, Berkmans pointed out. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, XRP price is down for the month, so why are whales opening bullish leveraged positions? XRP traders are piling into leveraged longs positions despite the recent negative news about XRP and Ripple. XRP token has experienced a 20% decline in 2024, and it currently is approaching its lowest daily close since October 18, 2023. Despite the challenging price performance, prominent traders at the OKX exchange heavily favor long or buy leverage positions. Surprisingly, funding costs for XRP futures have remained flat for the past month, raising questions about whether retail traders are predominantly betting on a price decline. Has negative news about Ripple and a founder impacted XRP price? Some of XRP's negative price performance can be attributed to adverse news surrounding Ripple, the company behind the token launch, and the development of Ripple Ledger's database. On February 5th, U.S. District Court Judge Sarah Netburn granted a motion from the U.S. Securities and Exchange Commission requiring Ripple to produce financial statements, including contracts governing XRP token institutional sales. The ongoing dispute with the SEC began in December 2020 when the regulator alleged that Ripple and its executives offered unregistered securities. However, in July 2023, a judge granted summary judgment in favor of Ripple, ruling that XRP was only a security when sold to institutional investors. Despite this, the latest decision indicates that the SEC has built a case to justify their complaint, leaving potential liabilities for Ripple. Investor distrust in Ripple was further fueled by the hack of the company's co-founder and executive chairman Chris Larson's personal accounts on January 31st. Analysts highlighted transactions totaling 213 million XRP, valued at about $112.5 million at the time. Regardless of whether the issue solely impacts Larson's assets, questions arise about the company's adherence to robust security measures. Interestingly, Ripple validators approved a clawback function less than a week later, allowing issuers on the XRP ledger to repossess tokens. According to David Schwartz, Ripple's chief technology officer, the functionality could be used to resolve legal disputes and comply with court orders. Schwartz explains that the new function differs from the current freeze feature already present in the network. XRP ETF expectations drop, and pro traders position using derivatives. Another source of dissatisfaction among XRP investors is the realization that the chances of SEC approval for an XRP spot exchange-traded fund are very slim, according to Van Buren Capital's general partner Scott Johnson. Senior Bloomberg ETF analyst James Seifert shared a similar outlook in a January 11th interview with Thinking Crypto's Tony Edward. Given the recent events surrounding XRP token and Ripple, investors might expect bearish sentiments from top traders. However, the trend has been the opposite according to the long-to-short ratio. The long-to-short net ratio consolidates derivatives positions across perpetual and quarterly futures contracts, offering insight into the positions of whales and arbitrage desks. Noticeably, top traders at the OKX exchange currently present a 7.2x ratio, favoring longs, approaching the highest in 30 days, a significant shift from the 1.6x indicator on February 1st. Data from Binance Exchange is less skewed, favoring longs at a healthy 2x, up from 1.8x on February 1st. In essence, XRP whales and market makers have increased their bullish positioning despite the price bottoming near 50 cents. To assess if retail traders took the opposing side of the trade and leveraged bets on XRP's price, one should monitor perpetual contracts funding rate. Also known as inverse swaps, these derivatives instruments incorporate an embedded rate typically recalculated every 8 hours. Essentially, a negative rate signals excessive demand for leverage short positions. Data reveals XRP funding rates have been near zero since January 4th, indicating a balanced demand for leverage between longs and shorts. Therefore, even if professional traders lean bullish, their positions find a counterparty of similar size in terms of leverage demand. Ultimately, data shows it is unlikely that XRP whales and market makers are blindly adding leveraged longs while the price continues to decline. On the positive side, there's no indication that these players are close to being liquidated, as the funding rate remains incredibly balanced. Our next top headline, Crypto.com president talks up MiCA, allowing exchanges to expand across Europe. Cryptocurrency exchanges stand to benefit from unified rules and regulations for the industry across Europe as MiCA legislation comes into effect in 2024. The implementation of the Markets in Crypto Assets, or MiCA, legislation could expedite the expansion efforts of major cryptocurrency exchanges across Europe, according to Crypto.com President and Chief Operating Officer Eric Anzini. Speaking exclusively to Cointelegraph, Anzini highlighted how increased regulatory scrutiny and the fragmented nature of European rules for the industry have made life difficult for exchanges to serve users across borders. We're looking forward to MiCA. I think Europe is a great market, but a very fragmented one. If you want to play by the rules, you must comply with very different frameworks in each market, Anzini explained. The company's chief operating officer said that Crypto.com has registered in key markets across the continent, including France, Italy, Spain, and the Netherlands. This process provides a dose of perspective when considering the hurdles that compliant exchanges face when expanding internationally. It's very costly for a business to do the right things currently in the market. MiCA will bring some harmonization and allow us to be more efficient while still affording a high bar on the compliance front. The collapse of the Sam Bankman-Fried's FTX empire has played a significant role in the increased scrutiny of the industry. As Anzini explained, regulators across the globe have made some adjustments to the frameworks that they have to regulate the space, especially around consumer protection and market integrity. The United Kingdom is another market in which Crypto.com has a significant presence. In June 2022, the Financial Conduct Authority, or FCA, announced stricter rules for cryptocurrency-related businesses and services. A raft of rules focused on advertising and investor protection mandates that UK-based firms implement a cooling-off period for first-time investors. The FCA also prohibited companies in the sector from using refer-a-friend bonuses and had clear rules about disclosing the associated risks of investing in cryptocurrencies. The UK is one of those markets where the regulator made some changes, but it's not the only one. There were some adjustments to be made to our offering, but we complied. We were on time and we were able to continue offering our services in the market, Anzini said. Anzini told Cointelegraph that Crypto.com's customer base is approaching 100 million users. The chief operating officer added that the platform has seen an influx of users since October 2023, coinciding with a surge in the value of Bitcoin, alongside hype ahead of the approval of spot Bitcoin exchange-traded funds in the United States. The company retains a strong presence in Tier 1 jurisdictions, according to Anzini, with North America, Western Europe, the UK, and Asia commanding a significant share of its user base. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.